Our 2026 base case for investing is simple. Continued debasement of the US dollar keeps pushing investors towards real assets and growth. When the dollar weakens, anything tied to productive capacity or global demand tends to outperform. That means staying long equities, especially companies with meaningful international revenue and sectors leveraged to the AI build-out here in the US. It also reinforces the case for metals like gold as a store of value in a world where cash keeps losing purchasing power. Put it all together, and the most durable positioning is owning assets, productive or scarce, or globally exposed rather than sitting in a depreciating currency. With that said, let's take a look at Nvidia. Is this the year Nvidia crumbles? Will its valuation overshadow? Will mega-cap tech reduce its capital spending, and will depreciation take down the highest flying stocks in the world? Here to talk about it, someone who knows better than me, my cat, Holly.
Every time people think Nvidia has run too far, it reminds us what a true outlier looks like. I've been here before. Back in 2014, after Apple had gone on a furious rally, I asked an analyst whether it made any sense to buy a stock that had already doubled. His answer stuck with me. You're buying the next 5 to 10 years of earnings from the best company in the world. Why wouldn't you? That same logic applies today. Nvidia has quietly moved from our 5th largest to our 2nd largest holding at Investigraphics. It now represents 7.3% of the S&P 500 and 13.5% of the NASDAQ, a staggering concentration for a single company. But when you're the best, you're the best. Nvidia peaked above $207 in late October, dipped below $175 in mid-December, and yet the fundamentals haven't changed. It's still the largest and most capable AI company on the planet, with the fastest chips and a sticky ecosystem that competitors can't replicate overnight. Yes, Google, Amazon, and Microsoft are building their own chips. Yes, competition is coming. But all three also confirmed higher expected capital spending for 2026. That's not the behavior of companies planning to reduce Nvidia orders. Meanwhile, Jensen Huang continues to reiterate a massive backlog and says Nvidia sells everything it can make. That's not a demand problem. That's a capacity problem. At a $4.5 trillion valuation and an EV to sales ratio of 24, you can absolutely bet on volatility. You can bet on doubt. And you can bet that if margins or sales ever slip, the drawdown will be violent. Someday it will. But when you zoom out 5 years and look at projected year-over-year growth of 56%, 61%, 38%, 10%, and 14%, you end up with a forward PE of just 15.5 on numbers that are entirely achievable. This is the paradox. Nvidia looks expensive today because its future growth is so strong. At the same time, the largest companies in the world are telling you, explicitly, that they expect to spend more, not less, on AI infrastructure. And Nvidia's growth trajectory makes the stock look cheap in only a few years, leaving very little room for bearish scenarios like Mag 7 produced chips to meaningfully dent the story before Nvidia's valuation resets lower on its own. In just 1 year, Nvidia's forward PEG is 1.08, 37% below the sector average. The market is essentially betting Nvidia won't hit its growth projections. But if it does, if the best company in the world simply meets the spending estimates of the largest companies in the world, we're talking about the possibility of a $10 trillion company. So am I putting all my eggs in the Nvidia basket? No. But am I still bullish after this run? Absolutely.
Listen, I'm not saying this is my top pick right now, and Holly and I are actually underweight the market. But despite the increased risks, I still want to own this stock. To see my top pick though, join my monthly newsletter on Patreon. Also, the platform you've been seeing on your screen is Snowball Analytics, a great tool for seeing all of your investments in one place, and not very expensive. A referral link for Snowball Analytics is in the show description on YouTube, and using it helps us out.
Friendly reminder that Holly the cat is a household pet, not a financial professional. Nothing in this video should be considered personal financial advice. All content is general and not tailored to your personal financial situation. Always do your own research or consult a two-legged professional before making financial decisions.